morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Friday. It is December 11th, Friday, and I hope you guys got some great upcoming plans. Wow, we're getting really close here to deeper into the holidays here with Christmas and everything. So, and end of the year. Wow. Anyway, so time does fly by. Hey, we do got a bit of economic news to go over today. Today's this whole week's been pretty light, but today's probably a little bit more heavy loaded compared to the rest. We'll start off with the retail sales for the month of November. So we had a 0.1% back in October. Forecast was supposed to be at 0.2% and went up only 2%. But if you strip out the big ticket items like autos, we had a 0.1% back in October and 0.2% for November, but it jumped up 0.4%. So Christmas sales must have been pretty good because when you take out the autos and stuff, the big ticket items, it popped up a bit for November. So that was obviously a very good sign right there. Producer Price Index. This is also known as the PPI. It is the inflation level on the wholesale side of things. It's not the big important data we look at, primarily because if inflation goes up or costs go up on the wholesale side, they don't always pass along to the consumer. So we look more directly at the consumer level, like the PCE, which is the favorite gauge, and also the CPI. Now, we had a pullback in October of negative 0.4%, and forecast for November was supposed to go up 0.1%, and it went up 3.3%. But if you strip out the volatility of food and energy, we have the core PPI, and we had back in October negative 0.3%, and the forecast was supposed to be 0.1%, and we went up to a modest 0.1% in November. So good pace right there. So that's a little bit more moderate. We also got the business inventories for the month of October. We had a 0.3% in September, and the forecast for October was supposed to be 0.1%, and it came in flat for the month of October. So basically, business inventories look like they weren't really looking to bring on more. Consumer sentiment dipped, as we could see. Well, actually, it didn't dip. Excuse me, it didn't go as high as expectations. We had a 91.3 in November, and it was supposed to go up to 92, and it just came up a little shy at 91.8. So excuse me, I take that back. It did go up a little bit, but just not as high as the forecast was. We got, excuse me about that. Stock market's down quite a bit. The Dow's actually down about 200, and again, a lot of it's taking its cue from the oil market as it's starting to drop below 36. I think it's reaching down to about $36 a barrel right now, so it's really dropping quite a bit, and this is what's kind of freaking out the markets right now. Also, they're getting kind of bad. Investors aren't feeling too good about the DuPont and Dow merger, possible merger coming up. So that's their stock market. Their stock prices have dropped quite a bit as well as a result. So this kind of translates into a better pricing for the interest rates today. We did have a bit of a drop. We are up about 28 basis points from where we left off yesterday, which is good. So we're on the rise right now to get a little bit better pricing. Now next week, so that means a little bit better interest rates today versus yesterday. But next week is going to be the big week because we have the FOMC meeting next week, and that will be the big topic where they're going to be waiting for that rate increase. Right now, it's about 83% forecast, percent of them raising the rate on about a quarter point at the December meeting. So, all right, folks, stay tuned. Hope you guys have a great weekend, and we'll see you guys on Monday. But the good news is that we got today. Take care. Bye-bye.